This changes everything. The last couple of times we had this pattern, it led to very big declines. That's nearly a bear market. That's a bear market. And that's a bear market. So far this time, we are avoiding it. We even have increased volume. So what is going on? Why is this time different? Well, November is here. And Warren Buffett is raising more cash, hitting a record $382 billion. Whoa. What is he waiting for? Because that is quite the pile of cash. That's a huge number. So since your time is very valuable, here are the notes. Higher lows are sufficient on the monthly chart because we remain in an expansionary pattern, which means that we got bullish and then we have low, higher low, higher low, higher low, higher low, higher low. So higher lows are sufficient. However, please note that volume is really important. If we're getting increasing price and increasing volume, that can help negate the potential for a downside. If we look here, 667 is the warning. If we fall back below that, pay attention to these yellow arrows because those were at least a 10% decline. If we now advance here to our weekly chart, this is where it gets a little bit curious. So looking here to the weekly candle, there's a few things that stick out. We're now back to higher lows are sufficient. However, if we look here to the top note, by closing at or near the low of the candle, which is basically right here, what does that mean? And we also have a gap. It's under $1, but the gap is still there. It means that the odds are decent that we're going to form a lower low to go fill that weekly gap. The question is going to be, are we going to close below it? Because as of right now, if we're tracking the July pattern, which remember started with a bearish engulfing candle, and then 1, 2, 3, 4, 5, 6, 7, 8, 9 hollow candles in a row. 9 hollow candles in a row, 9 hollow candles in a row. So far we got 1, 2, 3, 1, 2, 3, but that's a full candle. It's a contraction, which means we're closing lower than we opened. Not by a lot. We can look up here to see those numbers, O and C, 682.7, 682.0. It's 70 cents lower. But remember, we want to pay very close attention to that 667. And more importantly, where do we close the week out? Because if it's tracking, it means that we're going to form a hollow candle at the end of the week and potentially form that hammer, which means we go lower and then rally back up. Pretty hard to argue that's bearish right there, but it was a little bit of a warning. So there we go. The 1 month and 3 month remain bullish. If we now fast forward to the key events that could drive this week, here they are. We got a lot of earnings. We got Palantir, we got Uber, AMD, Robinhood, a few others. And there's not really that much data this week because the government shut down. However, on Wednesday, we got ADP non-farm payroll, and that will be important for me. What I'm looking at specifically here is whether we're going to form a higher high. So we talked about the pattern before, going from extreme greed all the way up here to close to getting to 50. So far we have a higher low. I'm not sure if that's a higher high. I'm not sure if this is the higher low yet. We got 1, 2, 3. We'd have to rip right back up here and go closer to 50 to repeat the pattern over here. So 1, 2, 3, 4, 5, 1, 2, 3, 4, and then finally dropped. I'm not sure what's going to happen here, but what really matters for me is whether we get back into 50 or back closer to 25. We're basically at the midpoint right now, close enough. Looking here to our key levels for this week, we have 682.07 as center, which is where we closed out. Weekly higher low, not that far off, roughly 3 points. Then we got our daily gap fill, and then the October 10th high. That October 10th high is pretty important, and the reason why is because if we pop here to our daily chart, it's basically the new beach ball that popped above water. So we have this really big resistance area here. There is some volume, can't deny it. We do have an inverse signal on the S&P as well, and we have 3 full candles in a row. All right, why does this matter? That beach ball. Let me show you. We had a beach ball right here, and we talked about it. So beach ball got here, popped above water, but what did it do? It bounced. So on the area that used to be the resistance, it came back tested, and then launched off of it. Okay, so what happened once? Yes, it did. If we go back here to our previous all-time high, let's grab a horizontal line. We'll snap it right here. And then what happened? Well, we got close to testing it, but not quite there. So if we now look, there's our previous all-time high. And right here, we got awfully close. Remember, when we zoom out to the weekly chart, this is what we're looking for. Sometimes we get a fail. Sometimes we get a gap down. And that's what breaks the weekly charts. So right here, what used to be resistance, 1, 2, 3, we didn't even have to test it. We found support at a higher area and above the 50 MA. So it happened twice in a row now. Let's see if we can find another time that it happened. Okay, well, it didn't happen again, right? So there's our previous all-time high. And then finally, when we get back above it, oops, let me actually correct that. I'm going to go back to the high right here from July. And then what happens? Well, we come down to a once. It's basically the same thing as before. What was resistance acted as support, acted as support. Did not even test the 50 MA here. That's the blue line. So we're finding buyers at increasingly higher areas. If now we go back in time to where we started, that's exactly what we're looking at here. Resistance. So if we come down and test, we could fill the first hole here. But there's also another gap here if we look closely. So if we fall below 667, that is going to be below 674, which remember, I'm trying to give you a lot of information all at once, but 667 is really the important note. Pause right now if you need to. I shared it to you earlier. So if we fall below 667, that means that we're already below here. So we're already getting a bit of a warning. 667 is going to be 5 points above our 50 MA. That's what happened the last few times. So this week, pay attention to the numbers because they will really matter. If you could please do me a huge favor and consider smashing that thumbs up or subscribing to the channel, I would greatly appreciate that. So there you go, October 10th high, first daily gap fill, and then to the upside, we got a weekly higher high at 6. Oops, that's an error. I'm gonna have to update that. Clearly, that is wrong. All right, presto magic, it's fixed. We got 685 as a round number. That's resistance 1. Resistance 2 is going to be here at 689.71. That's a weekly higher high and also a new all-time high. And then 695 is a round number. Whoa, these numbers are getting awfully big. Yes, and if you remember, 690 was actually our target going into the beginning of the year. So we basically got to where I thought we could go from here. So if we go up or lower into the end of the year, I'm going to give you an update. So I'll show you what I mean here. On January 5th, I said, I think we're going to go to 690 as long as the pattern holds. 690 is the target by December. We basically hit it. We're within 30 cents. I would call it target hit. All right, let's move forward. Let's delete that right there. Now we're going to move forward to a new tool we're going to be launching very shortly. If we have a look here, you might be familiar with the slope of hope. That is where red is bad. We have high, lower, high, lower, high, lower, high, and then green is good. Low, higher, low, higher, low, higher, low, higher, low. So we derive that into a simple dot formula. Red is bad. It means we're pointing down. Green is good. It means we're pointing up. So remember, there's a trend, and then there's also the pattern. So what we often look for when we're looking at patterns is two things. I like to look at the moving average because it's the short-term price. So when we look right here, like the short-term price tells us whether the trend is up or down, but this tells us the pattern right here. So it takes 3 candles minimum to form a pattern or a trend change, but the movement or the trend is always higher. So the pattern versus the trend. Long-term trend, long-term price, short-term trend, short-term price. So if we're pointing up, we're above the short-term price, we're bullish in the short term. If we're above the long-term price, we're bullish in the long term. And that is where we look at the pattern with the recent candles to know where we are relative to support and relative to support, or if we are below it, what could happen? Again, that beach ball, once it knocks into a key area, when it's below it, it's bearish. When it's above it, it's bullish. So if now we simplify that, thinking of this line like a moving average, here is the S&P 500 for the one-day chart. The lights are caution because we closed within the candle's previous daily range. So right now, it's nonstop green. Is it buy or sell? Our system is not confused at all. You can go to thealgo.com if you want to join our waitlist. As of right now, it tells us we have 1.2 normal days of selling for us to slam down to support. Here's what it looks like. The green line is support as long as we're above it. So our candles right now, green is good, yellow's caution, red is bad. We gave a little bounce here. If we were to slam down to that green line, it should act as support. Looking here to our weekly chart, it's the same thing. Our weekly says non-stop buy. And sorry, where's our monthly here? There's our weekly, there's our monthly. It's non-stop buy and non-stop buy on the 1 month and non-stop buy on the 1 week. So the system's not confused at all. It basically means buy. And as a reward for watching all the way until the end, I want to show you a stock that I entered in my system on Friday. We purchased it. It's UPS. Right now, we have an entry at 96.42. Current price is roughly the same. We bought on Friday. It is a 5.6% weighting. We're going to add more at the end of this month if it closes above the alert. We have 58 shares. which means that it's currently going to be a roughly 5.6% weighting. And our risk reward is 2.7 right now. There's our target, there's our trim, there's our stop. All right, very last thing. If you want to go to the YouTube tab and click on posts, there's a free quiz for you right here where you can actually learn what your archetype is. This tells you what kind of trader you are, and it takes less than 1 minute. So if you want to go fill that out, again, link will be, I'll leave one in the description for you. Otherwise, thank you very much for tuning in, and I'll see you on Monday morning at 8:30 a.m. sharp. Thanks so much.